the US All Sport, and in fact at this point in time I already have a sell position triggered, and I will be taking you through what led to the decisions and how we can capitalize on the next potential move here. So the first thing we will be doing here is to run through the 4 hours time frame, which is where my analysis for this week started. Remember, we had a tremendous week last week on the US All Sports as we capitalized on the strong bearish momentum as we rode it all the way down into that lowest point at the $69 area before we started seeing some buying opportunity during the second half of last week. And in fact, we were able to scoop in a minimum of 700 pips from all of these multiple entries. And well done, congratulations to everyone who capitalized on this opportunity. Now let's see if we can replicate the same scenario for this week. So here on the 4 hours time frame, what I did here was to take into consideration the nature of price action since the month of October, and I was able to identify a simple setup that we will be using to guide our trading decisions for this week. Now, if you look at the structure closely, you will see that since the month of October, price action has been on a strong bearish momentum, and in fact, it's transitioned into what is looking like a descending channel. Now, if we connect the series of lower highs, we have the resistant line of that descending channel, and when we connect the series of lower lows, we have this support line of this descending channel, which further emphasize the strength of the sellers within this time frame. Now, with the situation we have here, usually when we have price fall into a descending channel like this, we want to be looking out for patterns and structures that supports the idea of selling that asset. Now, in addition to these resistance and support line of this channel is this marginal trend line I was able to spot within the channel, which is going to be the major trend line we will be using to guide our decisions for this week. Now, we saw what happened during the course of last week's trading session. Price did break down the descending trend line here, and in fact broke it out again at the end of last week's trading session. Now, in addition to this trend line is our key level for this week, which is going to be situated at the $72 area. Now, let me zoom in so that we can see things clearly. So you will see the $72 area here. This is going to be serving as our key level for this week. And if you look at this level closely, you will see how it had played a major role in determining the direction of price action since the mid-month of November. Right above the structure, it was more of a buying niche. Remember, we saw buy pressure around this area a couple of times at the beginning of this month before price action finally broke down that structure. Now, before the end of last week's trading session, we saw how price action came back to close somewhere around that $72 area to further emphasize how important it is based on this current market structure. And from a technical standpoint, whenever we notice price breaks down a key structure such as the $72 level here, we expect that some point in time price may come back, retest the structure, where continued selling pressure around this area will incite a downtrend continuation. Now, that is one perspective we are going to be looking at today. How are we going to be seeing price break out of the $72 level to incite an uptrend continuation? So you will see we are at a very crucial juncture at this point in time. So what we will be doing next is to scale down into the 1 hour time frame, where we want to see how market participants are currently reacting to our key level at the $72 area. Now, another thing I want to emphasize here is the resumption of what looks like a reversal pattern around this area, something like a double bottom structure where a breakout of the neckline has already happened, and we might likely be seeing price maybe retrace back into the neckline, hold this descending trend line before another wave of bullish momentum will happen. So I just needed to let you know this before we scale down into the 1 hour time frame. Now, scaling down into the 1 hour time frame, we begin to see things more clearly. So what I did this morning was to try and see what is really going on in this market since the second half of last week. Now, while doing that, I was able to spot a couple of trend lines which appear to transition into an ascending channel, though it's not really an ascending channel at this point in time, but we can say that this trend lines here has been supporting a bullish bias in the last 3 to 4 days. Now, the question here is, will these trend lines continue to support the momentum to the upside, or are we going to be seeing price break down these trend lines to incite a sell-off? Now, if you look at the structure closely and look at what has been going on since the beginning of this week, you will see that though the week has started on a strong note, as we saw buy pressure resume this week around the $71.38 level, and we saw price rise into that our key level at the $72 area. And as soon as price tested that key level, we begin to notice selling pressure resume around that area. And in fact, it lasted about 3 hours before price action continued to the downside. So we had a range at the beginning of the week, as we saw price confined within the $71.98 level. I can approximately round that off to $72 level, and then the $71.38 level to give us a flat channel to work with for this week. Now, usually when we identify this kind of pattern on our charts, you know how we do it. We want to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, look at what's interesting about the support line. You will see, if you look at it closely, you will see how the support line at the $71.38 level also shares a beautiful confluence with that ascending trend line there. So with this beautiful confluence there, I decided to join a sell position by placing a sell stop order below the $71.38 level, which has already been triggered, and right now I have about 36 pips running in profit at this point in time. Now, if in any way any of you took advantage of this opportunity, well done and kudos to you for capitalizing on that opportunity. However, if you had missed out on this one, don't worry, the week is still very, very early, and we could still see some new chances to join the downtrend continuation if that is going to be the case for this week. Now, how do we capitalize on this, especially if you had missed out on that opportunity? Well, the first thing we want to acknowledge here is the fact that price just broke down both the support line of that range at the $71.38 level, and of course the ascending trend line we spotted earlier. Now, from a technical standpoint, when price action breaks down this kind of key structures, we do expect that at some point in time, price may come back into the structure, maybe into the $71.38 level, or this ascending trend line, where the inability of buyers to break above this ascending trend line would be a beautiful signal that we want to be joining the downtrend scenario. Now, if continued selling pressure persists below this level, those of us who had missed out on that first opportunity could capitalize on the downtrend continuation pattern from that area. So let's see if the market will come back and retest the structure. If it does, we want to be on standby to capitalize on the downtrend scenario. Now, it is not all the time that price action does come back to retest structure. In fact, it could transition into a trend continuation pattern around this area, maybe something like a consolidation phase, transition into maybe a pennant or a bearish rectangle pattern, where the breakdown retest of that structure could incite a downtrend scenario. So that's another thing we want to be looking at. So to guide that decision there, I want to be marking out a level that we will be using to guide that decision. So I think somewhere around the $71 area seems most appropriate to capitalize on the next move. So if we do this correctly, hold on a second, we are still going to bring out our candle chart. Let me give this a different color. So we have the $71 area. So you do want to be marking this one out on your chart right now, as we will be needing it to guide a further decline to the downside. So if we bring back our candle chart, let's see. Okay, we have a beautiful, all right. So we've been noticing some buy pressure here. So we could add more sell position if price action does break down and retest the structure, then we could join another decline to the downside. So as it is right now, and considering this huge bearish engulfing candle that broke down both the $71.38 level and the ascending trend line, I'm of the opinion that price may likely be going to the downside for today. So let's be on standby to capitalize on that one. Then another thing that we usually do in this community is to keep a balanced outlook to whatever structure we are analyzing. So in as much as we're looking out for selling opportunities from this current structure, we cannot ignore the potentials that buyers could still take over this market. Now, for me, the only condition that will make me want to consider buying the USOIL spots this week or in the first half of the week is for price action to climb and break out of that $72 area, which happens to be our key level for this week. And you know how we use our key levels in this community. As long as price remains below the key level, we continue to look out for patterns and structures that supports the idea of selling. And if price breaks out of our key level, we will continue to look out for patterns and structures that supports the idea of buying that asset. So these are my views on the USOIL spot. Now, there's something I would like to emphasize here, that is, we might be able to see an opportunity to join a buy position even before the breakdown of the $72 level happens. Now, the only way we can join a bullish momentum before the $72 level happens is for us to see that price action transitions into a series of higher highs and higher lows within that area. And if sellers find it difficult to break down the $71.38 level, as we could, if we continue to see buy pressure above that structure, then this could welcome some buy positions even before the breakout of the key level happens. So let's take this into consideration, mark out these levels on our chart, and let's see how the market is going to play out from this current structure in the next couple of hours. So this is my simple view on the USOIL spot for today. If you have any questions, feel free to let me know in the comment section. Then there's some other things I would like us to be aware of which are affecting the market sentiment in this particular market. Now, behind the scenes, there is this the strong NFP data which came in on Friday, pointing to a resilient US economy, and this also has prompted some optimism over the outlook for increased demand in the US. Now, US considered to be the second largest consumer of oil, and with a buoyant economy, it shows that we might likely be seeing some increase in demand. So what this simply means is that we cannot ignore the potentials that buyers can still come into this market. Then secondly, there is this skepticism that the recent production cut announced by the OPEC Plus will be enough to offset rising supply from countries outside the OPEC Plus jurisdiction and waning global demand, of course. Now, this along with weak economic data from top importer China raises concern over fuel demand and should cap any meaningful appreciating move for the USOIL spot. So coupled with all these factors, we might, in fact, last week, the China's General Administration of Customs reported on Friday that the crude import fell 10% from October to a 4-month low in November, which is something not encouraging for the oil market. So it's more like we are caught within an imbalance of a buy and sell opportunities. So we want to be using our technical structures identified on the chart today to guide our decisions going forward. So you do want to be marking out this level, as these levels will help us to position ourselves for whatever move the market is about to make. So if you have any questions whatsoever as regards to this current setup or as regards to my explanation so far, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list.